Sam Bankman-Fried was convicted. How does this affect your tax return? If you lost money on FTX, claim that loss as a Ponzi scam loss on your taxes. We can itemize that deduction on Schedule A, which means there's no limit on how much you can deduct. I had one client who had lost about $140,000. We took her taxable income all the way down to zero. This is a powerful way to get a whole lot of traction and maximize your tax benefit out of a tragedy of losing money in an investment. The big news here in November was that Sam Bankman-Fried was convicted of all the counts that he was charged with in financial crime. How does this affect your tax return? That's what we're going to look at right now. If you lost money on FTX, then there is a basis for you to claim that loss as a Ponzi scam loss on your taxes. Why is that important? Because a typical loss is a capital gain loss, and we're limited to only taking a net capital gain loss of $3,000 per year. But a Ponzi scam loss, we can itemize that deduction on Schedule A, which means there's no limit on how much you can deduct off your income for that loss to Sam Bankman-Fried. If you're interested in that, we have some videos on our channel where we've discussed the mechanics of how that works. But basically, the requirement for this is, as oftentimes it's been called the Bernie Madoff deduction. Now, it doesn't have to be a true Ponzi scam to qualify for this deduction. What's required is that the operator of the financial investment, in this case, FTX, Sam Bankman-Fried, that he was indicted by federal or state government authorities, either by an agency or by a criminal indictment. And when that happens, that is your ticket to the safe haven for treating this as what's called a Ponzi scam, or basically a financial crime loss. All right. Not all losses are a result of somebody doing something criminal, but if you are, then you could do this. Now, I had one client who had made some gains, but then she had lost about $140,000. We were able to claim a Ponzi scam loss. We took her taxable income all the way down to zero, and she had losses left over. I think she had like $90,000 of other income, $140,000 loss. Took her taxable income down to zero. She had $50,000 of loss. So she started the next year with $50,000 of net operating loss on her personal life. So, this is a great way. It's a silver lining. So you can go back and amend your tax return the year that FTX got exposed. We can go back and make that correction. It might be an attractive thing. Contact our office if you'd like assistance in doing that. We've done many of these. That's if you invested in FTX. There's a line of reasoning out there. People have claimed that if you lost money on Luna, that Sam Bankman-Fried, using his ill-gotten gains from his Ponzi scam, took down Luna by manipulating the market. There's a lot of claims on this. Of course, Do Kwon himself was criminally indicted. So either way, you have an attack for getting a Luna treatment, a Ponzi scam treatment, and itemizing that deduction as well. This is a powerful way to get a whole lot of traction and maximize your tax benefit out of a tragedy of losing money in an investment. So that's one way to turn a Sam Bankman-Fried disaster in your personal life into a little bit of a silver lining. Thank you very much for listening to today's show, and I hope you enjoy it. Please give us comments. We would love to respond to any questions you give us. If you have tax questions that we can apply to, we will try to address it in future shows. Please hit like, subscribe, follow. Thank you. Have a great day.
The Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. He has clients in 71 countries. He is one of the top experts in crypto taxation in the US. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Are you frustrated with using online crypto tax services to calculate capital gains? Are you a high-frequency trader, DeFi, NFT, play-to-earn, or whale investor? Nothing is too complicated for the experts at CryptoTaxAudit.com. Are you frustrated that your accountant doesn't understand crypto taxes? Crypto Tax Audit uses a proven, bulletproof crypto tax return methodology to prepare a tax return that doesn't attract the attention of the IRS. Crypto Tax Audit also offers an exclusive audit defense membership service. It's like car insurance for your tax return. If your return gets selected for an audit of crypto reporting, they will defend you at no additional charge for the entire life of the audit. No one offers anything like audit defense membership. Go to cryptotaxaudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.